Hello, everyone. It is
CJ the Smart Guy.
Dr. Jamar Montgomery with another episode of Genius and the Smart Guy.
Yes, sir.
Here to talk about all things politics, culture, technology, and especially and particularly crypto. Why? Because if you don't have no crypto, then you know what your granny is. And you don't want to be 80 years from now and your grandbabies is asking you, did you buy crypto? And you gonna say, no. Great granddaddy, great granny was a hoe. You don't want to be in that position. What, in all seriousness, we're here to talk about something very specific and very technical. And I am so glad that I have somebody as skilled and as knowledgeable about this as CJ. Once again, for those of you that don't know, CJ is a CPA that focuses on crypto. That is his specialty. That is the person that when I have crypto questions, that's who I go to. And as I get a few more things settled up, he's going to be my accountant. This is somebody that I trust with crypto and tax information, and it's somebody that you should be listening to. CJ, man, it seems like there's been a major shift in how taxes are computed, how the IRS is treating crypto transactions, how even just the administration is dealing with things. And what are some of the things that you're seeing as a CPA? Because I know you have to stay up to date on regulations and the changing rules, and I imagine that they change every year.
Pretty much throughout the year also.
Oh, okay.
Yeah, throughout the year they're changing. Every year they seem to change, and I'll say every year there's also new documents that need to come out, new questions, new updates, new regulations. If you were a tax expert 3 years ago, that doesn't mean anything today.
Got you. So one of the things that are required for CPAs are like continuous education or continuous learning.
Yeah, so we have something called CPE, Continuing Practitioner Education, and basically every other year we get tested or we have to take a certain amount of hours of CPE, and that's going to update us on new tax regulations, how things are changing. We can choose which classes we take. I tend to stick in the crypto arena, tax arena, some bookkeeping, ethics, but there's a huge amount of information that goes into being a CPA. At least when I took the test, there were 4 different sections. You had regulation, which is mostly tax. You had auditing. You had bookkeeping, which we call FAR. And then you had business economics. However, they've changed it just a little bit. They made it more specific, but when I took the test, that's how it was. And then we had to pass an ethics exam on top of already having 150 credit hours, 30 hours of advanced accounting, and sitting under a CPA for a year. So being a CPA is not an easy task. And for those that aren't sure exactly what a CPA is, I look at it as a scorekeeper for business. I know when I was on tour and I was saying, hey, I'm a CPA, there were a couple people who got real concerned because they thought I was going to take their kids. And I was like, I'm not CPS. And they were genuinely like, They were genuinely not understanding. And so as a CPA, I look at myself as a scorekeeper for business, similar to like how a scorekeeper for basketball, they're going to keep track of the points, the assists, the rebounds, and essentially they're the translator to explain what's going on in the court and put it into numbers so that people can digest it more easily. And you should never really get mad at a scorekeeper. Anytime a scorekeeper makes a mistake, it can always be corrected. And typically we're supposed to be unbiased.
Yeah.
We're not supposed to root for a certain team. I'm not supposed to be, hey, I want IRS to take all your money. Never that. And typically I'll go in favor of the client, but I won't go to where they'll get in trouble.
Got you.
So I try to stay unbiased, stay in, hey, this is where you were at, this is what you owe, this is what you get back. And if you don't want to take the stance that I'm saying for you, then you don't have to take that stance. I just won't sign it off for you. That's happened many times where they're like, I should know this much. And I'm like, well, you do. And then they do their thing.
Yeah.
That's where it's at. That's what a CPA is. And yeah, I've enjoyed it so far.
Okay. I would imagine that the number of CPEs, continuous credits, or practicing education or whatever, those learning modules I would imagine that there's more crypto modules than there were in the past.
Yes, but nowhere near as many as there needs to be.
Got-
The vast majority of these are so beginner that I don't think people are really understanding how to dig into them. And even like with some of the laws that are being put out there, I don't think they really understand how crypto works. Crypto was made not for taxes. It was technology to literally not have a government overseeing it. And so when the governments are trying to tax, it doesn't really fit. They don't control it. So it doesn't really make too much sense.
Got you. Got you. Okay. Okay. If you're telling me that, if you're telling that there's not that many and you're an expert in it, then I would expect that you would be teaching some of those classes pretty soon.
Correct.
Is that in the
That's
pipeline for
definitely
you?
in the pipeline.
Okay.
I've reached out to a couple people to get it going. However, the bigger money is just going directly to the CPAs themselves and teaching them how to do it. But once you start
Okay.
getting into the language,
Okay.
most of them can't even digest the language because crypto is a whole new language.
Yeah.
So in their minds, they're thinking, well, all I have to do is keep track of a cost basis. When you start mentioning forks and wraps and airdrops and the various other things, and you start talking about NFTs, and a lot of times they're just like, wait, this is too much. I thought I wanted to get into this, I really don't.
Yeah.
That's why it's such a small amount of people that are in this niche.
Yeah.
And even the ones that are, like I know we have Rebecca Samuels, but she doesn't go to the vast majority of clients. She likes to stick to her own clients, and that's it. You have Raven
Out in Houston.
out in Houston.
Yeah,
Yeah, he's a CPA. He focuses on crypto, but he doesn't do the tax side.
Yeah.
And so you do have some CPAs who understand crypto, but the tax side it's so much dirt, it's so much work to do. Most people are like, no, I just don't want to do that. And so they stick to either the consulting side only, or they just talk about it and they don't really want to actually do the tax stuff.
Absolutely. Absolutely. Shout out to Raven, by the way.
Yeah, that's my guy.
He's getting married and getting ready to have a baby.
That sounds about right.
Yeah. But okay, so with since going into taxes is nitty gritty, help us understand some of the things that are coming down the pipeline. Should we start from a legislative basis, or should we focus on right now particular regulations that are being implemented?
Yeah, so I think the best thing is to start just with the original rules.
Okay.
Before 2009, there was no crypto, so it wasn't a big deal. The first laws I could see that came out were like 2013, but it was pretty friendly. A lot of people were using something called like-kind exchange, which they were saying, hey, because crypto is considered property, that's why the IRS deems it, then I should be able to go from Bitcoin to Ethereum to Litecoin and never have to pay any capital gains tax because they're all property. But the IRS came out and said, no, those aren't like kinds. Bitcoin, Ethereum, and Litecoin are all very different types of cryptos. They're not like kind properties, therefore you cannot do like kind exchange.
Now, aren't there like kind exchanges with stocks? Or is it like kind exchanges with real estate?
It's real estate.
Real estate, okay.
Definitely real
Okay,
estate.
okay.
So that brings me to 2017, Tax Cuts and Jobs Act. When Trump was in office, he said, hey, like kind exchanges only for real estate. See, before you can do like kind exchanges with a multitude of types of properties, but in 2017 he said only real estate. So that has completely shifted now.
Okay.
Now, some of the newer things, so not even just new, but I would say since I believe 2019, they started asking on the front page of your 1040 tax return to make it simple, have you been involved with digital assets? Have you been in cryptocurrency? And so
I hate that they've asked that question now.
correct, because I look at it as a fraud trap.
Yeah.
I look at it as a way for them to say, hey, we don't have the technology in place to really audit you guys the way that we want to. We know that you're making money, but let's just put this out there because the rules are if you commit fraud, they have an infinite amount of time to audit you. And see, the thing is, if you check that box, yes, like I recommend to my clients, if you do your best, typically they only have 3 years to audit you. So 2019, 2020, those years are already done. So if you tried your best for those years and you were within a certain amount of accuracy, you should be good. But if you check that box no, and you were in crypto, they're probably not even gonna audit you yet. They're probably gonna wait until you have some big money, and they're gonna be like, boom, here's an audit. Because if you've KYC'd, meaning know your customer, meaning you've given one of these exchanges your social security number, your information, they already know that you're involved. And so if you were on Coinbase and you check that box no, they're just building up a case against you. And when that time comes, it'll be an easy audit for them.
Now, can you go back and be like, hey, I accidentally didn't?
Yes.
Okay.
Those are called amendments.
Okay.
But typically you only have 3 years to go back.
Okay.
Typically. You can try to go further, but then you're really at their mercy. And if you're at their mercy and they're building a case on you, I haven't had a situation where I had to do amendment prior to 3 years for something like that.
Yeah.
However, I've done plenty of amendments within those 3 years to say, hey, let's just check that box yes, because you were clearly in crypto. And even though the IRS, they have these bulletins that come out that say, hey, you don't have to report your crypto if you didn't sell it. The truth of the matter is these bulletins aren't the law. So even though it's on the IRS website as a bulletin, it's not actual law.
Yeah.
Which I don't make the rules. I'm not the IRS, but that's just the reality of it.
Yeah.
So I want to go by the actual laws that are in place, by the Internal Revenue Code, not the bulletins they post on their website.
You bring up a good point, because now, like the Chevron case, I don't know if you've followed up with that, is dealing with regulatory agencies and their rulemaking authority. So I'm interested to see how that affects the IRS, because if it's any agency that is most powerful, I would say is the IRS.
Yeah.
Outside of the military and Department of Homeland Security, I'd put the Department of Revenue. There we go.
Yeah.
Okay, I think that's good, because I don't think a lot of people that are in crypto know that, or even think about it in terms of the IRS building a case against them, because it's almost like, why don't you tell me, IRS, why don't you tell me what it is that you think I owe, and then let me fight against that number, versus, because they already have the information.
They don't.
Okay.
They don't.
Wait, hold on. So you mean to tell me that Coinbase isn't reporting to the IRS?
So
Coinbase, who else? What are some of the other exchanges?
Kraken.
The name was on the tip of my tongue. Kraken. Cash App. You mean to tell me that they're not reporting to? Because I thought that they were.
So it's complicated, right? It's complicated.
It sounds like some relationship.
So originally they were not reporting because it wasn't considered money. Coinbase, they've been reporting for quite some time now. However, they have not reported any 1099-Ds or 1099-Bs or DAs or any of the documents. Typically with stocks, you would get a 1099-B.
Okay, then why is Coinbase asking me to create tax documents?
They are providing you tax documents for you to do your taxes on your own, but I have never seen a 1099-B with Coinbase ever on any IRS transcript. However, the IRS has the information, but they're not getting it reported as a 1099-B.
Okay, because I know they got 1099 DIV, 1099 INT, or
for interest and for dividends.
Yeah.
So the reason it's gray, so Block, which owns Cash App, they do report a 1099-B. Coinbase has not reported a 1099-B.
Okay.
So all this leads to the final regulations that were just passed. There was something called Revenue Ruling 2024-28 that just went through that basically said, hey, all these exchanges, all these brokers, you have to report, like you said, a 1099. However, they said stop doing the Bs, stop doing all these other things, because digital assets are completely different. Yeah. So 1099 DA is the new form. Now, The reason I say they don't have all this information is because it's almost impossible for them to track what we call a cost basis. So a cost basis is how much you bought your cryptocurrency for, plus how much you spent to get it into your possession. So say you bought $10 worth of Ethereum and the fee was another dollar. Your cost basis at that moment is 11. Say you bought that on Cash App, then you moved it to Coinbase. Coinbase doesn't know your original cost basis from Cash App. Does that make sense?
Yes, it does.
They don't know. So
all they know is that it just showed up in their wallet.
It just showed up in their wallet.
Yeah.
So,
but don't know. They can't even prove whether or not it's your particular wallet that it came from.
Correct.
Got you. Go ahead.
They don't have any idea if it was from you. They don't know if it's income from a business.
All they know is that it showed up.
It just showed up.
Okay, go ahead. I'm listening. So cost basis.
Correct. And so in crypto, if you sell, spend, or trade, those are taxable events. And so let's say you had a cost basis of 11 and you sold it. You had bought it on Cash App, you had sent it to Coinbase, and you sold it for 20. Your capital gain should be 9 because you sold it for 20, your cost basis was 11, you should have a $9 capital gain. However, because Coinbase doesn't know your original cost basis, they could easily say, oh, that's a $20 capital gain because your cost basis was 0, because that alleviates them from liability, from not being able to keep track of the cost basis. So you could easily have a situation where Cash App will say, okay, your cost basis was 11, they have your cost basis. Let's say you transferred it at 15. Transferred it at 15. They might say, oh, your capital gain is 4. And then Cash App gets, or Coinbase gets it, they don't know your cost basis. They say it's at 0. You could easily be paying double taxes, easily be paying taxes on 2 different exchanges because they are unable to keep track of cost basis. So what this new revenue ruling basically said is every exchange has to report. And then around the same time, they have a final regulations that just came out that said, hey, we're going to take away the universal wallet approach. The universal wallet approach says that if you transfer it from your Cash App to your Coinbase, that's still in your possession. So there is legally no taxable event. Even if they both report it, it's easier to fight because somebody like me is going to say, no, this is the real cost basis. Those aren't 100% accurate. Now they're saying if you transfer it from one wallet to another wallet to make it more simple for the exchanges, now that becomes a taxable event, which is wild because it's still yours. Never have we ever had a situation where you move property from one place to another and it became a taxable event. How would you feel if you had a vehicle and you moved it from Texas to California and they said, oh, simply because you moved your property from one place to another place, we're going to tax you for it?
Well, they do when you register your car.
That's a yearly tax.
Versus
to drive.
But versus I got you. God, bruh, I just got a headache.
Correct. This is why most people don't want to touch it.
Goodness gracious.
And when we have these traders who are dealing with not just the regular exchanges, but they're also dealing with DeFi that doesn't report anything whatsoever. And then you have self-custody, which doesn't report anything. These are the reasons why somebody like an Elizabeth Warren is like, hey, let's get rid of self-custody. Let's get rid of DeFi. Let's just have everything on exchanges so we could track everything, which goes against the entire spirit of crypto.
Senator Warren, you know better. You wrote my bankruptcy book. I expect more out of you, Senator Warren. I expect more out of you. But I'm sorry, that was just my little rant right there.
No, understood. Understandable.
Interesting. Okay, so those were the regulations right there. So moving from a universal wallet approach to now, I'm tracking the cost basis of every time that it moves from wallet to wallet, correct?
Correct. Now, they have not come out with the full details on self-custody because they can't really figured that out yet. They have not gone into depth with wrap tokens. So a wrap token is basically if you have Bitcoin, but it's not real Bitcoin because it's on the Ethereum blockchain, but it represents how much Bitcoin you would have on the Bitcoin blockchain. That's pretty much a wrap token. They haven't come out with all the information on that, nor have they gone fully in depth with NFTs yet.
Okay.
So there's still a lot of gray areas. However, they are trying to make progress. I personally believe that there's going to be a whole lot of wrong cost bases. I believe there's going to be a whole lot of John Doe summons where they say, hey, report this. I think there's going to be a whole lot of reviews. I think there's going to be a lot of audits. And I think there's going to be a whole lot of angry people that show that they owe a whole lot more taxes from their regular tax preparers when none of it is reality. I think it's about to be a crazy madhouse.
Man, that puts things in perspective. And like you said about just having somebody that really specializes in it to really understand. When you're not making that much money, you're, man, I want to do the right thing. I want to do, or not even just the right thing, I want to do the best thing,
Yeah.
but I'm willing to take a chance. But it seems like the more that you are actually in the space and more that you're actually making money and dealing with it on every day, the importance of really having this thing down pat. So are there any other IRS first question is, what should people that are in crypto right now, what should they be doing to prepare, or what would you advise your clients to start doing when it comes to accounting? Because you're not thinking about that as somebody that's in crypto. You're just like, I'm buying this, I'm buying this, I'm selling that. I want to pay my taxes, but what kind of...
Yeah. The best advice I can give is to organize your crypto transactions, which, correct, the same
You asked
sentiment
me
that
to
you
be an
have,
adult in crypto.
right?
I want to be a DGen.
Because with these new regulations, if you don't have a cost basis that they can verify, they're going to assume it's zero, which means that you're going to be paying taxes when you probably don't even need to.
Why? I just think that's crooked. And the reason why I think it's crooked is because they've been working with like Chainalysis and TRM Labs, who tracks. They do tracking. And I remember reading something about a contract that they were working on with the IRS, one of those companies. So I'm like, why aren't they already auditing people?
Oh, they are. But they're mostly auditing people that higher dollar amounts. For instance, say if somebody has a $10 million capital gain and they don't report it at all, those types of things they've gone after. But Chainalysis is more for a lot of the criminal activity,
Yeah.
not necessarily for just taxes. And then they also have a lot of these John Doe summons where they're like, hey, we just want you to provide your information just to back it up. It's actually really wild that a lot of this stuff is happening, but it's happening.
Yeah.
And their technology is getting better. So just because you were safe in 2021, 22, even 23 and 24, doesn't mean in 2030 that they won't have all this down packed. Because I'm pretty sure once upon a time, people in stocks were saying the same thing. And they said, oh, no, you need to come out with 1099B. And now you can't get away with any of that stuff now, like at all.
Yeah.
And I feel like they're going to wind up doing something similar in crypto. However, they have to figure out DeFi, they have to figure out self-custody. And how they do that, I'm not sure.
Yeah.
Because you don't want to stifle growth in America. But
Says who?
this is a lot of the Republicans.
You believe that?
I feel as though a lot of them don't want to stifle growth in America. I feel as though that they understand that Bitcoin is a big industry and there's a lot of money in it, and they don't want to lose the money to other countries. I've talked to a lot of executives, and a lot of them have moved to Canada with their business. They've moved to the UK, they've moved to Puerto Rico, they've moved to El Salvador, simply because the regulations here were either unfavorable or they were so confusing they just didn't want issues with the SEC, because the SEC has been suing almost every company out there and then don't even give a good explanation on what is a security versus a commodity. And there's been so much like confusion in America for some years now that a lot of executives, they just go overseas. So that's millions, if not billions and billions of dollars going overseas that America's losing out on, and they're losing out on a lot of tax money from these companies going overseas. So they want big business to stay here. They want the money to stay here. It's just how do they do it? And in the government's eyes, how can they maximize their profits from keeping the business
Yeah.
here?
Because I just like organizations like the Texas Blockchain Council, right? I know that they get it.
Yeah,
Right.
Lee Bratcher. Shout out to Lee Bratcher. He's a good guy.
I know that they get it. I met some folks from there in 2022. I know that they get it because there's a lot of mining that goes on in Texas.
Correct.
There was a lot of mining that was going on here in Washington because of the cheaper electricity prices.
Okay.
But I don't know. I think that it's a shame that our legislators have taken this long to really pay attention to it in the sense of having something that's pro crypto and not just pro crypto from a financial basis, but pro crypto, pro blockchain as an industry, as a technology. Yeah, as you can tell, I'm probably a little jaded towards our legislators.
They don't understand it.
Yeah, they don't understand it. And you've seen me advocate for lobbying our politicians and other crypto groups I'm glad that we have organizations like I Stand With Crypto, but I had been talking about lobbying politicians for years.
Yeah.
You know what I mean? So I'm glad that we got people like yourself who understand the nitty-gritty of these regulations and how they apply and how we can be protected. Because, man, that's one thing now about crypto is like the Wild West, and it's becoming more civilized, slightly. But yeah. So we're going over you said 2024-28 revenue regulation.
Revenue procedure 2024-28.
-28. Okay. Is there anything else that you feel people should know?
So from a tax perspective, that's the main one
Okay.
that's coming out. Everything else is pretty much the same. If you earn crypto, that's considered revenue. You never have to report how much crypto that you own, but you still have to report the US dollar amounts that you earned in crypto. And you also want to make sure you keep track of the cost basis. That is the biggest thing. If there's anything else that I stress to you, I will go back in time to all the crypto transactions that you've ever done and try to keep them organized. I know that might be a tall task, especially for people who have been in DeFi. However, I'd highly recommend it. And I know it's also difficult because you have some people who lost their money on like a FTX or Celsius.
Yeah.
And they can't even get those transactions back.
Yeah.
Who has those transactions?
Who?
The IRS.
That's my point, is that the IRS has access to this information, and it's like, just even if you weren't in crypto, they know how much you've made from your job. They know how
From
much
your job.
from your job. They may not know how much you've made outside of that, but they have. And if you report the wrong thing accidentally, that opens you.
Yeah. So I'm gonna say this for all those who file their taxes, and I know this sounds crazy, but it's actually the truth. April 15th might be the deadline, but the IRS doesn't release your wage and income transcripts until late May, early June. Your wage and income transcript is basically your cheat sheet to see whatever the IRS sees. So if you're ever trying to make sure that you don't mess up on your taxes, just file an extension, wait till your wage and income transcripts come out, and make sure that whatever you report is similar, accurate to that.
It's not a fun experience of having somebody look through your finances and look through all of that.
Look, I don't make the rules. I'm not the IRS.
Louise.
I'm the one who's trying to make sure that your life is a lot more easier.
For those of you that do not know what a wage and income transcript is, if you thought that the 1040 was long, when you've been in crypto, when you've been in stocks, when you've been on anything that is regulated by the SEC, regulated by the United States government, you will get a fuller idea of everything that you've done during that year. And you might actually be proud of yourself. But it is not fun when you realize that there's a whole nother level of documentation.
Correct.
And I've learned that just recently. So it's, oh, this is a
Yeah. Yeah.
new experience.
That's why wealthy people, they normally don't file their tax until October 15th.
Yep.
There's levels to it. The people
Yep.
who want their refunds really quick because they need the money, they file typically late January, early February. Regular people that work just 9 to 5s, they normally file it right before April 15th. And then you have the wealthy people and the business owners. They normally file their extensions, get their wage and income transcripts, and don't file until October.
Yeah. Dang. You just dropped some heavy stuff on us.
Yeah.
You just dropped some heavy stuff on us. Okay. Shoot, what else? Okay. All right. So we know that from like the regulatory agency. Is there anything on, like I said, from a tax perspective that we should be looking at? Any legislation, any executive orders that you're looking at, or should we not necessarily worry about that? Because I know we got what, FIT 21,
Yeah.
SAB 21,
SAB 121.
SAB 121,
Yeah.
House Resolution 109, House Resolution 109.
Yeah, so there was an executive order in 2022 by President Biden that basically demanded all the politicians to learn about digital assets, cryptocurrencies, things like that, because they haven't been able to come up with a decent framework because most of the politicians don't truly understand it. And even politicians that think they understand it, most of them don't. And when FTX scandal erupted because of SBF, there was a lot of confusion, a lot of negative sentiment around crypto as a whole. And so Gary Gensler, who is the SEC chair that Biden appointed, FIT 21 was essentially going to basically classify what is a commodity versus what's going to be a security. It's passed the House. It hasn't gone through the Senate yet, so hopefully that passes through. I know that Patrick McHenry would be very happy with that. That has not gone through yet, so that's not official. You had mentioned SAB 121. That came from the HJ Resolution 109 that basically would have said, hey, the SEC doesn't have full control over everything. Some of this actually has to go to the CFTC, which is for some of the commodity stuff, and that there may be some judicial review over some of this because it can get complicated. But basically, both Republicans and Democrats came together, passed in the House, passed in the Senate, and then Joe Biden said, hold up. We like the SEC having all the control. You guys are trying to go away from the SEC. I like my man, Gary Gensler.
Yeah.
And he vetoed the first bill that got passed by both Democrats and Republicans. It got through the House and the Senate, and he vetoed it. They tried to override, but it didn't have enough to override it. And we continue to have SEC running ragged, suing people left and right. We've continued to have confusion. I wish I could go through all the details, but it's so confusing because nothing has officially passed. And typically as a CPA, I don't even get into the minutia until something is passed, simply to avoid the gray areas.
Yeah.
But nothing has officially passed at all in terms of becoming law. So as of right now, the SEC is still suing companies left and right, saying that their cryptos are considered securities. They still haven't given a full explanation on why they're calling these securities versus what's not. The only thing they've said is Bitcoin is not a security.
Yeah.
So we know that Bitcoin is a commodity because they can't sue anybody.
Yeah.
Who you going to sue for Bitcoin is decentralized. Pretty much all the other companies have been sued, or they're in a process, or they're being reviewed, regulated, but nothing's really passed. Even like anti-central bank digital currency acts that were introduced by Tom Emmer. Shout out to Tom Emmer. He came to the Black Blockchain Summit, spoke to us. I believe that passed. I know it's been introduced. I believe it passed the House. Hasn't passed the Senate, not law. So as of right now, we just have these final regulations. We know 1099 DA is coming out. We know that the universal wallet approach is going away and you have to start using the individual wallet approach. But nothing's really got passed. And so that's why this election for crypto is going to be very important. You mentioned lobbying towards politicians. There's been a lot of lobbying to President Trump. That's why he's championed the Bitcoin community. I believe somebody gave him $850,000 worth of Bitcoin. I know the Winklevoss twins have given him some Bitcoin. And so he's taking money in Bitcoin. There was another bill that was introduced by Senator Lummis in Wyoming that basically said that we could have the US dollar backed by Bitcoin, but it has not passed anything yet. So these are just introductions. There's been a lot of bills introduced. Some have passed the House, only one has passed the Senate, and that one got vetoed. So
I know Wyoming is trying to make it crypto friendly as a state because they DAOs.
Correct.
And DAOs being able to operate as companies there. So yeah, it's just interesting to see how various states or how they're approaching crypto.
Utah as well.
Utah, okay,
Yeah,
that's good to know.
A friendly state. And there's a couple others that are
Nevada,
trying to come around. Not as much as Wyoming or
not
Utah.
as much. Yeah, definitely not as much as Wyoming.
Yeah, Wyoming is great. Shout out to Senator Cynthia Lummis. Fun story about Senator Lummis. So I was actually at the BPI, which is like a Bitcoin Policy Institute meeting in DC. And I was talking to Senator Lummis about these things, and she was basically saying, hey, more than likely the wash rule is used in stocks that say you can't, basically you have to give a certain amount of days before you can sell and rebuy back and keep the lower cost basis. But in crypto, you're allowed to sell and buy back immediately and keep that loss. And she was saying that may go away. And as we were talking, a fire alarm rang off. Like literally a fire alarm ran off. And so me and Senator Lummis walked/jogged down 13 flights of stairs to get to the bottom. And we had a really good laugh. Me and Senator Lummis were good. We're on the same page. Wyoming is big. There's no state taxes there. They're very friendly on crypto. And I think that's one of the reasons why Kanye is out there on his ranch, because you can mine Bitcoin out there. Not sure if he's still doing it or not, but
you think he was mining Bitcoin?
That's what he talked about. But I don't know if he's still doing it.
Do you think he was mining Bitcoin or he was just talking about it?
He talks about a lot of things. I'm talking to the man who knows Kanye. But Senator Lummis welcomed him with open arms.
I pitched Kanye. I pitched Kanye on crypto. I pitched Kanye on DAOs.
So when he wears Nakamoto Satoshi hat, you think he's just trolling?
Who knows?
That's the cool thing about Bitcoin. It's pseudonymous.
Who knows?
Because they talk about him not being a billionaire anymore, but that doesn't include the Bitcoin that he may have mined or not. We wouldn't know.
Maybe.
That's the great thing about Bitcoin is nobody knows how much you have. It's pseudonymous.
Very true. Very true. Man, you just dropped a bunch on us. And this episode was all about you, brother. All about you. Like, I'm hear everything that you had to say. Man, anti-CBDC bill. So it just seems like there's more power that's going on right now in the regulatory agencies than actual law that's being implemented.
Correct, because none of these have been signed by the president, because the president likes, apparently, the SEC to have more governance, even though Democrats and Republicans came together. They came together. Something
that seems impossible.
Correct. Something that you wouldn't expect them to do. They came together, signed a bill, and said, hey, let's not have the SEC have total control. This is the SAB 121 in respect to HJ 109. And he was like, no, we want the SEC to have more control. And that's where we're at. We're basically just waiting for the next administration to come through, see some of the stuff that's in the House. Maybe it gets passed through the Senate. Maybe the next president is more crypto friendly. Trump spoke at the Bitcoin conference. He seems to be championing Bitcoin. Whereas Biden, he pissed off a lot of people, even with the Dane tax, where he was saying, hey, we should have additional taxes on crypto mining.
Sleepy Joe Biden said you ain't black if you don't vote for him.
Yeah. Oh, and there was one more thing that I didn't mention that I think is very interesting. It actually made me very upset when it happened.
Go ahead.
So, do you remember in Memphis, there was a young black male named Tyree Nichols
Yep.
that was beat up, and I believe he got murdered by black officers.
Yep.
They waited a few days to release the video, and it felt like a movie production the way they built it up. The day that they released that video, there was an announcement from the White House, the same exact day around the same time,
Yep.
that basically said that crypto had negatively affected people of color and young people. But thankfully, it hadn't affected the greater financial institutions. And when I read this, I was like, I'm young and I'm a person of color, and it hasn't negatively affected me at all. Bitcoin has been amazing for me. Crypto in general has been amazing. And when I read that, it triggered an idea that they may be trying to put a barrier to entry, something like a credit investor rule.
Yep.
That says if you aren't worth $1 million or making at least $250,000 in a year, not including your home, then you won't have access to be able to buy it. This is why a lot of people are not able to get into the first round of investments.
Yep.
Because the first round is typically friends and family. The second one is typically for accredited investors.
Yep.
And then the public gets into it.
Yep.
And so I believe Bitcoin and crypto is for everybody. I don't want those barriers to entry.
It's venture capital for the 99%.
Correct. And so I believe that may have been a lead to that. And they released it the same day as that video. So as I'm trying to scream at black people, hey, don't let this accredited investor rule goes by, everybody was focused on Tyree Nichols. And not rest in peace to him. There's nothing like, I'm not trying to limit his death, but the way that they positioned that, I believe, was very
physical death, and your physical death of one and the financial death of millions.
Correct.
Yep.
And to me, that was a huge red flag that they released those around the same exact time. And I know that's how sometimes politics work, where they say, hey, look at this.
Yep.
And they do something with the other hand. So that was very concerning, because we don't want a barrier to entry into Bitcoin, because if you put a barrier to entry in Bitcoin,
I'm gonna cut you. Bro, that point that you made about Tyree Nichols and them doing that switcheroo, yeah, that it's just like you said, it's hard sometimes to be like, why?
Yeah.
All of a sudden, but
Yeah.
we may never know. We may never know. But I guess now that we've got to the part of the show where final thoughts, man. What are your final thoughts? We talked about this regulation and some of the legislation and how the one of the few times that you can have a bipartisan bill gets vetoed by Joe Biden.
Yeah, he's gone. He's done. So, final thoughts. Still stack your Bitcoin. Government can't really control it.
Yeah.
Yeah, pay your taxes. That's cool. Legally, it's pretty easy to avoid them if you know what you're doing. Make sure you know what you're doing. Make sure that you are checking that box yes on your 1040s as well as your 1120s and 1120Ss. If you're asked about crypto and you're in it, make sure you check that box yes, even if it's just 1 or 2 cents or dollars. Still check that box yes. Take evasion off the table. And don't worry too much about the regulations, because once they come out, I'll keep you updated.
Most of he said, avoid, not evade.
Correct, because avoid is legal.
Avoiding is legal. Evading. So next time somebody says, "Oh, you tried to evade me," no, I was just avoiding you. I was making a space, but I was not trying to evade.
Yeah.
But I was avoiding. Interesting.
Evading with the cuffs on your hands, but Not the J. Montgomery cup.
Nah, well, we don't make cups. We make nice timepieces.
There
We
you
make
go.
nice timepieces to celebrate your successful avoidance, so that you can have a business expense. That because when you're someone that is in circles of high net worth individuals, there's a certain way that they dress. And there's a certain image that you need to present in order to be taken seriously. And once again, smart money gets a J. Montgomery. New money gets a Rolex, old money gets a Patek, but smart money gets a J. Montgomery. Always remember that.
There you go.
So when you've been taking the advice of CJ the smart guy, you're gonna be making smart money.
There you go. Church.
Church. Y'all take care. This has been a great episode of Genius and Smart Guy, all things politics, culture, technology. Y'all take care. Yes, sir.
Yes, sir.
Yes, sir.
Ah, man.